And there we go, everybody. Look at who I have today on Minds of Markets. We've got Phil Flynn. I am so happy to have Phil here. Phil's a senior market analyst at Price Futures Group. You see him all the time on Fox Business Network. His sweet spot is the energy sector, and he's been in this business actually a little bit longer than I have, almost 4 decades here. And he provides expert market analysis, risk management insights into global petroleum and energy markets. I mean, you literally can't go anywhere and look for information, articles in the energy sector without seeing Phil's name out there. He is, his reputation is unbelievable. Fortunately, I have in the past had the opportunity to actually be on some interviews with Phil, and not only does the guy know everything going on in the energy sector, but man, is he fun to work with, right, Phil?
It is. You pointed out I was much older than you, I think, in this interview. And yes, I did change your diapers on the floor of the exchange many years ago. But, hey, what can you say?
It's all right.
2 years on you.
Everybody's got a little something that they have to, skeletons they have to let out. So Everybody, again, Minds of Market podcast today. So excited to have Phil in here. And Phil, let's get right into this. How did you get into this business? And then not only how did you get in the business, how did you get to the point of being literally the go-to person in the energy sector for analysis, for information that the world wants to know?
I think it's kind of crazy because actually I started as a summer job as a runner on the floor of the CME group, right? And at that time I was going to college, and during the summer, the guy said, "Man, you're really good at running people over with orders and stuff. And, we're going to double your salary if you decide to stay." And I'm like, "Really?"
So you went from $20 a week to $40 a week.
Yeah, exactly. And it's like, I'm rich. And I never left, and it's kind of funny. You mentioned, how did I get into oil? Well, I used to like the Beverly Hillbillies. That's number one. Jed shooting up some crude.
Texas tea.
Yeah. But, people don't realize I was actually in the business before they traded crude oil futures. I mean, I think they started trading crude back in 1983. I think at that time I was on an order desk at Lynn Waldock. I think I took one of the first orders ever in the crude oil market. And I think the way the crude market used to trade back then, I'm still waiting for the Phil to come back, okay? Because back in New York, they had a long time to get those fills back. But, and ever since then, I've been covering this market probably since the 90s, right? Every day. And probably the claim to my fame is I was rated by Bloomberg News when they used to do these ratings as the top oil price forecasters 4 or 5 years in a row. So, just right place, right time. And
there's the resume builder right there. That's the resume builder.
Yeah,
that is really awesome. And because I know that every time that you and I have been on together in the past, it's always been energy focused. So let's cut right into this. Okay.
Yeah.
Given where oil is right now, and we've come back a little bit here. Just last week, we were down in the lower 70s. We're trending back towards $80 a barrel right now. But in general, why isn't oil higher? Given all of the geopolitical risk out there, given, the Russia-Ukraine thing, which is over 2 years old at this point now, where we saw that massive, massive spike when that first happened, given what's going on in the Middle East, why are we, I don't want to say stuck at $80 a barrel, because, everybody would like to see $50, $60 a barrel, right? For gas prices. But to me, common sense would say that, man, there's still got to be a lot of risk premium in the market, but it doesn't seem like there is.
Well, I think they've taken the risk premium out a lot because we haven't had a major disruption. First we saw that big spike above 100 last year when the Russian-Ukraine war was, and the Biden administration said, we're going to do everything we can to shut down Russian oil exports. And we're going to put it on a price cap. That's going to do it. That's going to teach those Russians a lesson. But if you look at Russian oil exports, they're higher than they were before the war. They're making more money, right?
And they've got buyers out there hand over fist.
They do. And the other thing, of course, when you look at the risk premium, the other thing that we had in place, when Donald Trump was in office and President Biden came in was strict sanctions on Iranian oil, right? We had them boxed in, right? Their exports were at the lowest levels they were in years. People didn't want to touch their oil because they knew it was red hot and they were really squeezing them. But we had a change of policy with the Biden administration. They lightened up on sanctions. They wanted to re-engage the Iranians. And then now their exports are at a 4-year high. So we're getting this extra oil. But I think we're on borrowed time because what we're seeing here is a Band-Aid over a bigger issue of an underinvestment in fossil fuels that I think is going to come back to bite us. And if we don't wake up to that fact pretty darn soon, I'm afraid our economy is going to have some very rough times, looking out a few years.
So do we have a glut right now? I mean,
No.
You look at, we don't. Okay. So you always look at supply demand, right? Prices are always based off of supply and demand. And demand seems to fluctuate almost on a daily basis, especially if you read headlines coming out of China. 1 week, the economy is coming back from post-pandemic. The next week it's slowing down and, you never know demand, but where are we in supply and demand globally?
Well, I guess it depends on how you define glut, right? It seems like in this world today, we redefine everything, right?
Yeah.
I think when you look at oil supplies,
it's got to fit someone's narrative, right?
Yeah, exactly. But consider where we're at here on the U.S. inventories. We're below average in every major category, whether it be gasoline, crude oil, diesel fuel. If you look at the supplies of oil, we're slightly below the 5-year average. But if you consider the fact that we drained the strategic petroleum reserve by over 180 million barrels, we're really way below average on supplies. And recently we've been, you look at supply versus demand on a daily basis over a 4-week moving average, and has demand the last couple of weeks been a little bit below supply? By a little bit. We've seen inventories build a little bit, but very, very thin line. In fact, on the path we're on now, I think this summer we're going to see a global supply deficit that could exceed 3 million barrels a day. And when that starts to happen, you're going to see those prices start to lighten up. It is. It really is.
So explain for everyone, if the U.S. is producing more than we ever have, right? What are we? 13 million barrels a day, something
13,
like that.
13.1, right.
Okay. So if we're producing more than we ever have, why is there always an issue? Why is there always this boy, prices go up so quickly and they come down, so slowly? Where's all the oil going?
Well, first of all, we're sucking it down like it's going out of style, right? We have seen U.S. inventories build because we had a warm winter, things like that. But, when people talk about U.S. oil production, they're looking at a snapshot in time, okay? A snapshot in time. Today, we're producing 13 million barrels a day. But people have to realize to get to that point, all the investment it took years ago to get to that point, all the innovation. So this doesn't just happen overnight, right? And even though these numbers are near a record high, we're seeing signs it's going to peak. We look at the U.S. oil rig count, it's starting to fall. We're looking at the new regulations that they're throwing on the oil and gas industry every time you turn around, making it more difficult for people to invest in oil and gas. They're even accusing the shale oil companies here in the United States of price fixing. Why are we focusing on U.S. oil and gas? Why don't we start focusing on our adversaries, right? We're empowering Russia, and we're empowering Venezuela, we're empowering, Iran. And here in the U.S., we're picking on the U.S. oil and gas industry. It absolutely makes no sense. So my concern is the falling rig count reflects a top in U.S. oil production that could come sooner than later. If we don't see a change in, the fundamentals, we're going to start to see oil production in the U.S. peak out. Yeah. And that means we're going to be more dependent on our adversaries for oil in the future.
So is there also something to be said that these oil companies got hurt during the pandemic, obviously, when oil just imploded, and they pulled back from R&D and they pulled back from actually getting into the ground? And now you read in the headlines over and over and over how the big oil companies are making so much money, but rather than putting it back in, rather than trying to get more innovation, like you said, and looking at the future, they're looking at profits and giving it back to their investors. Is
Well,
that really a thing?
well, I mean, you got to take it into context, right? I mean, first of all, the U.S. shale industry almost put themselves out of business by being too successful, right?
Yeah.
There was a theory in the U.S. shale industry that you could lose money on every barrel and make up for it in volume. Apparently, that doesn't work over time, right?
Let me figure out that math there. Nah, doesn't work.
Yeah, it doesn't work over time. So I think the investors in the gas industry, when they created this glut and the economy slowed down, the investors are saying, dude, you've got to restrain yourself, right? I mean, you got to look at the big picture, and that's, what happened with Scott Sheffield over at Pioneer. He wasn't colluding with OPEC. He's saying, like, listen, we can't keep cutting our nose off to spite the face. We have to know what the global supply and demand situation is. Otherwise, we're not servicing our investors. We're going to go out of business and we're not making profits. And the other big misnomer, I get so mad to hear Democrats, record profits in oil company. Oh my goodness. How dare they? They got to give it back. It's like, dude, you don't understand. The percentage of profits that the oil and gas industry make as a percentage of their investment is minuscule compared to every other industry on the planet. And
the overall numbers are just larger.
It's larger, and the amount of investment it takes to bring that gallon of gas to your corner. Yeah. Think about the millions and billions that it takes over time to do that. And so you better hope they're making profits, because if they're not going to be able to afford to do that. Yeah. They're not going to be able to service the economy. And they're not going to be able to grow the U.S. economy. I mean, the U.S. oil and gas industry never gets enough credit for driving this economy, and they absolutely do. Not to mention the record taxes that the industry has to pay the government.
Okay, it makes some sense. I think for the lay person, it's a little bit biased in the media. It really is, in terms of, boy, the oil companies are making so much money and they're just giving it back to their investors rather than, the R&D and thinking about the future. But, that's why you're here to answer the question.
Right.
And
right. Well, that's what the politicians tell you. They never want to blame their own policies that drive up prices. It's like, oh, those evil oil guys, see, they're making profits over there. Don't look at the fact that we put on 50 different regulations. We taxed them here. We taxed them there. We delayed their drilling, right? We threatened to sue them. We called them war profiteers and price gougers, and then you're wondering why the heck they're, making money or trying to make money. I mean, so we've got to get rid of this oil companies, bad guys. The U.S. energy industry has driven the global economy because of their innovation, their risk taking. And, somebody's got to pat these guys on the back instead of kicking them in the butt.
So that's a good segue into when you say, the U.S. has really driven the global market. So we had an OPEC meeting last week, and, there was some commentary, and I saw your comments actually on the extension of the cuts, but pulling back maybe a little bit earlier than had been expected. And the immediate reaction, as we saw a week and a half ago, whatever it was oil prices got hit pretty good. And now we've rallied all of that back. So how much of OPEC policy, how much does that really drive the price of oil?
It drives it a lot, especially when the U.S. starts to step back, right? I mean, OPEC is playing the long game right now. They're assuming, with policies here in the United States, they can regain control of the global market. So they definitely have an impact on where prices could go. And, it's kind of funny. It reminds me of 11 years ago. You remember that, Scott? The taper tantrum, right? I remember I was on Fox. I think it was on with Liz, your buddy Liz and me. And I was talking about, what happened to the market? It's like, because Ben Bernanke, I think at the time, said, oh, the Fed might taper back on bond purchases. Yeah. And even though it was such a little amount, the stock market crashed. They had to backtrack. Same thing with OPEC. We're talking about a supply deficit of 2.5 million barrels a day. They're thinking about adding 180,000 barrels a day. It's like, come on, dude, that's not even enough to top off your gas tank. Come on.
Speck of dust.
Yeah, exactly. It's psychological. And I think the market now realizes that because they've got it all back and then some.
Yeah, exactly. And do you think that if the shale production starts to pick up back here again, how is that going to affect where we are a year, 5 years, 10 years from now? Because we have pulled back quite a bit, haven't we?
Yeah, we have pulled back. I mean, the rig counts have topped off.
Right.
It seems like we'll pull back. But listen, I mean, it's not just about oil when it comes to shale. Uh, what revolutionized the U.S. economy is natural gas production from these shale wells, right? I mean, I remember back in the day, we had Alan Greenspan saying that the biggest threat to the U.S. economy was the United States' inability to produce natural gas, and that we were going to be dependent on other countries unless we figured it out. Well, the U.S. oil and gas industry did this. Now we are the biggest natural gas producer in the world. And we're going to be able to clean the world because we're going to be exporting cleaner burning natural gas to other countries. They can replace those dirty coal plants with the cheapest hydrocarbon on the planet, which is U.S. natural gas. So it's crazy to try to slow that process down
Yeah.
because this is going to power not only our economy, improve our trade deficit because we're going to be exporting a lot of this stuff, but with artificial intelligence, the demand for power and electricity, we're going to need as much natural gas as we can. I mean, we have a power gap growing, right, for electricity. We're not going to be able to meet that demand, so we should encourage the United States, instead of subsidizing wind and solar powers and interrupt, we should be subsidizing U.S. natural gas.
And why aren't we?
Because there is an agenda here. Anything fossil fuel is bad. Anything alternative energy is good. But that is short-sighted. It's not even realistic. I wish they'd follow the science and they realize that they're going to hurt the economy unless we change course.
That doesn't sound very promising. It really doesn't. But
I'm a big believer in the American people. They can be sold a line of whatever, a natural gas line for so ever. But then they wake up and they smell the coffee and they say, "Hey, what's going on here?" They're telling me that alternative energies is going to create jobs. Not happening. They're telling me it's going to make prices cheaper. The exact opposite is happening. And people wake up and smell the coffee. And I think there's going to be a huge backlash. Wait, we're seeing it in Europe, right? We saw a big shift in the elections.
Yeah.
And a lot of that happened because of energy policy. People look at these, idiotic policies that are disrupting their country, making their economy bad and costing them jobs. And they're like, enough's enough. And I think we're going to see that, in a lot of other places as well.
I mean, that was a pretty big shock to the system. When we see what it's done to the markets overseas in Europe, we've seen what it's done to bond futures, and it's been a major impact.
Well, and I think it's going to be positive. It reminds me, Clinton, Trump the first time, right? And everybody said, "Oh my gosh, if Donald Trump gets in, the stock market's going to go down." And when it looked like Donald Trump was going to win, the stock market crashed. Before you knew it, that was the low for the decade, right? So I think the same thing can happen in Europe.
That was a heck of a night that night. Yeah. I mean, one of the biggest reversals of the market that I could ever remember.
Right.
That was something. I want to close up with you, and I appreciate your time so much. If you had to predict by the end of this year, pre-election, so early November, end of October, early November, okay? And I know that there's so many variables here. Just give me a price for crude. Give me a price for average national price for a gallon of gas.
I gotta believe that for crude we're going to be close to $88 by the end of the year.
So about 10% higher.
Yeah, I think short term right now. I mean, it looks like we're on target to get back to 80. We've got resistance at 84. You usually get a run up to the 4th of July. You pull back, and then if it looks like we're going to get a cold winter, prices can go back up. I think U.S. refiners have got a kind of a leg up on gasoline. The refining margins were really strong early. They pulled back a little bit. The natural gas, the gasoline prices probably going to be around $3.50. But keep in mind, that you're going to get a price break in the winter by the end of the year because you're going to get rid of those summer blends back to the winter blends. So I'd say 350 for national average, probably closer to 350.
Yeah, people probably looking at that right now would say, yeah, that's still high, but I'll lock that in right now. We don't want to see the $4. We don't want to see the 450. People would probably lock that in. So I know that I am going to be petitioning, well, at least to the small circle of people that I know, for you for U.S. Secretary of Energy.
Thank you. Actually, though, I know people who know Janet Granholm, and Janet's a fun person. I'm telling you. So
can't be as fun as you are.
Well, that's true. Nobody is. I'm telling you. But Janet's trying. Listen, I think there's going to be a big change at the Department of Energy, and I appreciate the appointment. There you go.
Absolutely. You up on the lake up there, enjoying some of this nice weather?
I keep telling people, I get locked in my trading room. It's like, oh, you're right by the lake. It's like, I go, I don't think I've been out of my trading room for 6 days, but I do get a look at it now and then.
You can look out the window and it looks nice anyway.
There you go.
Well, Phil, I really, really appreciate your time. You are absolutely, and I'm not just saying this, you are one of the good guys in this business.
Thank you,
there's
buddy.
a lot of people that
Thank
you, that we both come across, and always fun to work with you, always fun to be on with you, and really appreciate your insights. Thank you so much, everybody. That was really, really awesome.
Thank you, buddy. Want to have fun?
Have a good one. Thank you.
The Minds of Markets podcast is an exploration, a deep dive into the minds of some of the best traders and investors in the market. Our goal is to help you, the listener, learn from some of the best out there to improve your knowledge and skill set as a trader or investor. The Minds of Markets podcast should be used for information and entertainment purposes only. The opinions expressed in this podcast are our opinions only, and none of the information contained in this podcast constitutes a recommendation that any particular security, portfolio of security, transaction, or investment strategy is suitable for any specific person. Trading is risky, and past performance is not a guarantee of future results.